Hello and welcome back to the TradeNeon software channel. And with that, also welcome back to our market analysis video series where we have a look at a market that is currently fundamentally interesting and analyze it within Futures Insights. If you don't know me yet, my name is Zimat. I'm part of the TradeNeon Academy team. And in this video, I would like to have a look with you at the 6E future, which is basically the price relation between the European euro and the American dollar. Quick disclaimer before we head into analyzing. Please be aware that this video is not supposed to be financial advice and/or intermediation. And also, please be aware that trading in derivatives in general involves significant financial risk. And with this out of the way, let's finally head into analyzing, where we start off with our dry powder indicators for the leveraged funds. If you've already seen the last couple of videos, you would know that normally in this case, it would say managed money or abbreviated MM. Please don't be confused by that. Leveraged funds or LFL and LFS simply are what the managed money side is for our regular resources, for example, crude oil and the gold future. The leveraged funds are simply that for the currency markets. And in this case, we can see that we got quite a neat position when it comes to the long open interest, because we can see that the leveraged funds hold quite an extreme amount of long open interest at the moment, and that the short open interest is comparatively low. This is quite convenient for us because this simply tells us that normally the leveraged funds open interest for the long side usually is in this area. So when we see that the leveraged funds are currently at a higher than usual position and quite an extreme state as they are at the moment, then we can see that they don't simply have that much more power for an ongoing trend. In this case, for a long trend that we have been seeing in the 6E for roughly the entirety of 2025 so far. And obviously, when there is not much more power left, at least from the leveraged fund side for a long trend, then it should only be logical that the short side is favored. And this is also the reason why we have been seeing short signals from the OBOS indicators, which also relates the current position that we get in this case from the long side to other variables, which include price, the amount of involved market participants, and the total open interest in the market. And quite prominently, we can see that we got this signal right here just recently, actually. I believe it was also when we had this unfortunately failed breakout attempt under this level right here that was not successful after all. So we returned to this zone right here, but that doesn't distract from the fact that at the moment the COT data, at least from the leveraged funds, is in favor of the short side. Okay, now with the leveraged funds out of the way, I would say let's head over to our dealers and intermediaries. And these are basically our PMPUs for the currency markets. So basically those parties that are commercially involved with these goods. So for example, producers, merchants, processors, and users. And here we see quite an interesting situation in the market, because they are buying comparatively much and they're also selling quite much. This positioning is normally quite a good indicator for an upcoming supply shortage. These things we don't really have in the currency markets because we don't have supply shortages in the same way that we have in the resource markets. What is important for us is that we don't really can obtain any very relevant information from these indicators at the moment, because they simply tell us that both parties or both sides are quite engaged. But luckily for us, our OBOS indicator tells us that, again, as we relate the current position to these other variables, that this market is also, or the dealers intermediary side is more relevant for the short side. So we just recently got a signal here. I think this is the most recent one with 93% strength. So quite a relevant position that we have in the market right now. The open interest is still going strong, as is the price. So you can see the open interest here by this blue line, and in green you can see the price. Usually the price and the open interest is correlated. So when they are in sync, basically we can see that everything is normal in the market. It would be interesting to see a drop in the open interest where while the price is still going sideways, for example, because that could give us a first indication that the market wants to go short now, because in that case that would simply mean that current long positions that are quite strong in the market right now are being closed, and that we might get a shift from an ongoing long trend to a short trend, or that the long trend is at least over for the time being. Flow cube is not that relevant as of right now, so we can go over that. But what is relevant for us is that basically with the release of this video, we are entering a short season that is going for roughly 2 months. So that is quite convenient for us, because in that case we get a higher probability on our side that the market is going short in this season or in this time frame. And this also already marks the end of this analysis, because with the currency markets we don't get a term structure. So with this being said, I thank you very much for watching. If you have any questions or recommendations, please feel free to drop them in the comments and we'll get back to you as soon as possible. And with that being said, thank you very much again for watching, and see you next time.